In dealing with debt, we're taking on those changes you've been hearing about with credit scores and mortgage rates. Who better than Ted Rossman, the senior industry analyst at Bankrate.com and creditcards.com, to clear up the misconceptions. I'm so glad you're here, Ted. Let's start with, how do credit scores affect the rate home buyers get on a mortgage?
Your credit score has a huge impact on your mortgage terms. First of all, whether you're approved in the first place, and then also very importantly, the rate you'll be charged. I actually think mortgages are the corner of the financial world where your credit score plays the biggest impact. And that's just because it's such a big ticket item and this loan lasts for a long time. So you really want to put your best foot forward when it comes to credit quality.
Can you give us an example?
A quick sample scenario, let's say you're buying a $400,000 home and putting 20% down. Typical mortgage rates are going to be somewhere between 6 and 7%. So if you have really good credit and you shop around and you get a 6% rate, you're going to be paying about $75,000 less in interest than somebody who got a 7% rate, maybe because their credit score is lower or they didn't shop around as aggressively. And that's just one example. You might even be able to do better than that. But suffice to say, every little bit counts. Mortgage lenders often look at 20-point ranges. So, a 760 credit score is going to get a much better rate than, let's say, a 740 or a 720, or, it really becomes most pronounced somewhere between, say, the mid 600s and the mid 700s. Your credit score makes a big difference.
Ted, if somebody has a great credit score, can they expect to get penalized and have to pay more for that mortgage?
I think what you're getting at here is there has been some controversy recently about some loan level price adjustments that Fannie Mae and Freddie Mac have made. And I think there's been this misconception that all of a sudden people with worse credit are getting better terms. That's not really true. Basically, what happened here is that in general, you're going to get much better terms the higher your credit score is. There's definitely a reward for having better credit. What changed recently is that ever so slightly, these rates went up a little bit on people with good credit, and they went down a little bit on people with lesser credit, relative to what we saw in the past. But there is still a very meaningful spread. You are still far better off to have a better credit score and a larger down payment. So the best way to put it, I think, is the penalty is no longer quite as severe on people with lower credit scores and lower down payments. But make no bones about it, better credit and a higher down payment is definitely going to get you better terms.
Thank you for making that so clear. We do feel better.
Thanks for having me.
Go to businessfirstam.com for where to see our show on TV.